We're in the middle of a raging bull market. Bitcoin is breaking new highs, altcoins are exploding, hype is everywhere, but here's the reality. Bull markets don't last forever. There will be a peak, and when that happens, the market will turn. The problem is, most people don't realize it until it's too late. If you don't have a plan, you'll be stuck holding your bags through another brutal bear market. Depending on the bag, it might not survive. But if you know how to spot the final stage of the bull run and take action, you can lock in massive profits before the crash. And you can use that capital to accumulate more in the next bear market. So today I'm going to show you exactly how to recognize the final phase of a bull market, what signs to watch for, and how to prepare for the inevitable reversal. By the end of this video, you'll know how to navigate the peak like a pro, instead of being just another retail investor left holding the bag. So let's start with what history tells us about market tops. Crypto generally moves in 4-year cycles, largely influenced by Bitcoin's halving events. Here's what happened in past bull runs. In 2013, Bitcoin ran up to $1,100, then crashed 85% over the next year. The top was marked by massive retail euphoria, media coverage, and huge price swings. In 2017, Bitcoin hit $20,000, followed by another 85% crash. The signs were the same. Altcoins were going parabolic, new retail investors were piling in, and sentiment was euphoric. In 2021, Bitcoin peaked at $69,000 before dropping over 75%. Again, the final stage was marked by wild speculation, meme coin mania, and retail FOMO at its peak. Every time the market felt unstoppable, every time people convinced themselves that, again, this time is different, and every time the market topped, reversed, and wiped out billions of dollars. So, how do you know when you're in that final stage? There are a few key signals that have historically lined up with market tops. The first major sign is on-chain data showing that long-term holders are selling. One of the best indicators is Bitcoin's exchange inflows. When long-term holders start moving Bitcoin from cold storage back to exchanges, it's often a sign they're preparing to sell. You can track this on CryptoQuant or Glassnode. Another key metric is the MV/RV ratio. When this metric goes above 3.5, it means Bitcoin is significantly overvalued and a top is near. And you can track this on Look into Bitcoin. The second major sign is sentiment indicators hitting extreme greed. One of the simplest ways to measure this is the Fear and Greed Index. When this index is in the extreme greed zone above 90, it means the market is likely overheating. And historically, every time the index has hit these levels, a correction followed. The third sign is parabolic altcoin rallies. In every past bull market, altcoins have exploded in value in the final months before Bitcoin tops. This is because as Bitcoin's dominance starts to decline, money flows into high-risk, high-reward altcoins. In 2017, coins like XRP and Ethereum did 10 and 20x gains in just a few months. In 2021, meme coins like Dogecoin and Shiba Inu pumped thousands of percent before collapsing. This is what's known as altcoin season, and while it can be incredibly profitable, it's also one of the biggest red flags that the market top is near. So if you see meme coins exploding, random low cap projects doing 50x, and people making insane predictions about how crypto is going to change the world overnight, it's probably time to be cautious. So how do you take profits without exiting too early? The best way to lock in gains without feeling FOMO is to use a tiered profit-taking strategy. Here's an example. You can sell 20 to 30% of your holdings when Bitcoin has increased 1 or 2x from the previous cycle. Sell another 30% when on-chain indicators signal that long-term holders are taking profits. Sell another 30% when altcoins start going parabolic and retail euphoria is at extreme levels. And you can keep a final 10 or 20% in case the market runs further than expected. So this strategy ensures you take profits along the way without completely exiting too soon. Now here's something that most people ignore. You need to prepare for the bear market before it happens. Once the market tops, it's already too late. Here's how to transition from a bull market mindset to a long-term portfolio strategy. Move profits into stablecoins like USDT to lock in gains without exposing yourself to volatility. Consider rotating into Bitcoin or Ethereum because they also tend to hold value better than speculative altcoins, especially in a bear market. Secure your assets in cold storage. If you're holding long-term, make sure your funds are off exchanges or any kind of third-party custody solutions. Don't buy back too early. After the last bull run, Bitcoin dropped over 75% from its peak. If history repeats, there will be much better re-entry points. The best investors don't just think about making money, they think about keeping it. So, to recap, the final stage of the bull market is marked by extreme euphoria, retail mania, and unsustainable price action. If you're seeing parabolic altcoin rallies, extreme greed, and long-term holders selling into strength, it's time to start locking in profits. The key to surviving the market cycle is taking profits while the market is strong, securing your gains properly, and preparing for the next bear market before it happens. So I want to hear from you. Do you think we're in the final stage of the bull market yet? Do you think we still have room to run? Do you think this time is different? Let me know in the comments. And if you want to learn how to navigate market cycles and protect your profits, check out learningcrypto.com. It's the best place to get real, no hype crypto education. Thank you so much for watching. I'll see you in the next video.